Good afternoon, ladies and gentlemen. It's Tuesday's Market Situation Report, or SITREP, here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz. And the word that has not been spoken in a long time is starting to rear its ugly head again, as we predicted. Iran, Revolutionary Guard commander, warns U.S. aircraft carrier, stay away from our speedboats. I have personal experience with this. When we were leaving the Arabian Gulf for the second time, we were on board USS Kitty Hawk. A bunch of these patrol boats came out, circled us, and then ran off to Oman. So I've seen this firsthand. It could be a potential threat. I mean, you know, we've been at unofficial war ever since the Shah of Iran got booted. We've had gunboat battles. We've shot down on accident a civilian airliner. I've almost shot down an Iranian helicopter that was heading right for the ship that wouldn't alter its course. Just because this isn't like front page news doesn't mean this is not going on and there's potential bad things that can happen out of the blue. So we got to keep one eye on Iran here, because after President Trump got in office and tore up the nuclear deal, quote unquote, whatever that meant, nuclear deal. This is not going away. And these guys aren't North Korea. The Krimo, some young guy, loves himself, wants to live, doesn't want to get killed. These dudes don't mind being martyred and sent to Allah early, right? And if you haven't heard of it, I strongly recommend you Google the 12th Imam. The mullahs in Iran believes it's their job to hasten the arrival of the 12th Imam and obviously wipe the United States and Israel off the face of the map. So we're going to talk about trading. We'll talk about bank earnings. We'll talk about all sorts of stuff going on. These are potential black swan events that can reach out and touch you, and you wake up and your 401k is a 201k. Here we go. So Ambassador Lighthizer, which you would think is neck deep in China trade negotiations, just fired a broadside over towards Europe. So we knew this was coming. We've talked about this for a while here, that once the president put a deal with China to bed, he's going after the EU. So this was really interesting. This was published late Monday. The U.S. Fair Trade Agency announced that under Section 301 of the Trade Act, it was proposing a list of EU products to be covered by additional duties. Here we go. So once we tie up, the left side of the map, we're going over to the right side of the map. That certainly can't be bullish. But, here we go. The president and Larry Kudlow and everybody, great, huge trade deal. It's going to be awesome. It's going to be huge. I'm telling you, man, it's going to be a sell on the deal. Great article of Two Minds on a blog called Of Two Minds. It's Chuck Hugh Smith wrote this. Trade deal folly, says Trump embraced the world's worst negotiating tactics. I really think he has, and the conclusions this guy makes is pretty good. That essentially we're going to get a political solution. Here it is. Thus, it is easy to predict that one, there will be no China trade deal signed in the next few weeks or months, i.e. U.S. negotiators realize no deal is better than a bad deal, which would be horrific for equities. Any trade deal that's signed, you ready, will be either worthless, i.e. a meaningless PR gesture, or worse, actively harmful to U.S. interests because it gave the Chinese everything and got nothing for the U.S. except a bunch of empty, unenforceable promises. Told you, folks, this rip-your-face-off rally since the December bottom has been a lot of hope. Right? A lot of people saying, the trade deal's not in this rally. I'm saying it is. Buy on the rumor, sell on the news. So we're starting to hear a lot more rumblings like this, that the trade deal is going to be awful, or no deal at all. And here comes China. China's starting to strike back more. Boeing backlash. China suspends $6 billion order for 100 of the 737 MAX. Obviously, that's a troubled aircraft. Well, the aircraft isn't troubled. The pilots are a little bit troubled, and some of the software glitches need to be fixed. But that's not good news. So stocks kind of rolling over. Stocks fall as U.S. plots new tariffs on EU. So we're thinking, hey, big rally on a potential trade deal with China, and then here we go, blasting over on the EU. So we're getting very, very closer to maybe a trade deal, but we're getting closer to earnings, right? Q1 earnings. Expected earnings pullback sets up a big test for the bull market. Companies that miss earnings estimates could respond by cutting spending, which could trigger a stock sell-off. So we're starting to see a little softness around here. I mean, jobs are good, GDP is good, earnings are not super bad. They could end up being, but they're not bad right now. So the economy is chugging along here, folks. Kind of a little bit of a shock today with the JOLTS jobs opening report. That was an implosion. That wasn't good news. But this was, a lot of stuff the president does. I'd like to say doesn't shock me anymore, but this shocked me late last week, the president calling for the Fed to cut interest rates. Folks, if you remember back in October, it's almost aged off the left side of our radar, but back in October, the Fed was talking about raising interest rates. Then we've kind of gone to neutral. Now you got the president out there on the White House lawn saying, the Fed's really screwed up. They should be cutting rates. They should stop their quantitative tightening and actually resume quantitative easing and pumping money into liquidity into this market. It's absolutely insane that the president's doing this. So Morgan Stanley, the moment of truth for stocks is here, right? This rip your face off rally wasn't a really big rip your face off rally. This is the number one buyer, folks, year to date of the S&P 500 has been who? The S&P 500. That's what's been going on here. This hasn't been massive buying by financial firms, hedge funds, institutions. There's been a lot of retail traders jumping in here, but this is a stock buyback run, and obviously going into earnings here, companies stop buying back their shares. Easy for me to say. And now this really is kind of the moment of truth for this rally. Do we keep heading higher, or do we take a breather here, or at least go back to the 50 or 200-day moving average here? This is a pretty decent rally, folks, and I don't see too many buyers jumping in here at the top. JP Morgan, investors should start building hedges as a bad omen. And then, who was it? Morgan Stanley, 70% probability of a pullback in the next month or so. So we're going to talk about all this stuff in our 1 o'clock live trade brief. We're going to talk about some bearish spreads that we've placed recently, especially on CME Group. We have to see what's going on with CME Group. CME Group had a monster run here, hit the top of this Keltner channel yesterday, and it's starting to give some of this back finally. So we're going to talk about EWZ as well, Brazil. We're going to talk about FXI. There's China iShares ETF hitting that 45.5 resistance and giving a little bit of that back. We have a bear call spread on here, the 46.5. That's looking pretty good. So we're going to talk all about all this stuff in our 1 o'clock brief, which I have to go get ready for. But if you're interested in taking a test flight, a 7-day, 1 week, 7-day test flight into what we do here at Top Gun Options for only $38, all you need to do is head to go.topgunoptions.com/go-flight. That's just like the Apollo 13 movie, right? I'm go for flight. Go.topgunoptions.com/go-flight. And for $38, you can take a 7-day test flight into everything we do here at Top Gun Options. Okay? Got to get running. Got my 1 o'clock live trade brief and about 2 coaching sessions, one-on-one coaching sessions later this afternoon with Debbie and Steve. So looking forward to seeing you guys as well. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless.